Welcome to the assumptions section. This is where we set the foundation for financial projections by defining key business assumptions. Capital expenditure assumptions. The assets are classified into tangible and intangible assets. Some common examples include furniture and fixtures, computers and software, office equipment, goodwill and brand recognition, patents, trademarks and copyrights, etc. Any other business-specific assets. As you can see, the data must be filled in for the next 5 years. Please input this data according to the depreciating values of each asset. Other assumptions. This section covers essential financial risk and valuation assumptions, including discount for lack of control and marketability, which are adjusts for liquidity and ownership factors. Company-specific risk premium, which reflects unique business risks. This input is editable. You can choose to add your own risk premium. Income tax rate, the effective tax rate applicable. Equity risk premium and GDP growth, rate essential for valuation forecasts. Cost of debt, the expected borrowing cost of the company. These assumptions directly impact valuation models and overall financial forecasting. Make sure they align with your industry and market conditions. If you're not aware of these inputs, use OE, our AI co-pilot, to get assistance or talk to your accountant or investment banker. That's it. See you at the next step.